Yeah, I've previously explained what payments on account are and the impact on people, and now I want to talk about how to reduce them. Fortunately, there is a way to reduce payments on account. Generally, you do it when completing your self-assessment tax return. You fill in some boxes. If you've already filed the return, there's a form you can do online as well. You just have to have a reason to explain why you want to reduce the payments on account. Typically, it will be because you think next year's tax bill will be less than what the two payments on account add up to. So then you claim to reduce the payments on account to that number, and then you pay reduced payments on account. It is not uncommon, I would say, for people to decide to reduce the payments on account to perhaps a level lower than the tax they really think they'll owe, just to help their cash flow. Because if you can't afford to pay the payments on account and you don't want HMRC hassling you to pay, it's tempting to reduce the payments on account to maybe even zero. The implications of that are, well, one, the upside is you don't get chased for payments on account right now. But two is when it comes to paying your real tax bill, there'll be no payments on account to reduce it, so you'll be having a higher bill at some point in the future. So you may end up wanting to reduce payments on account after that, and you're in a bit of a vicious circle. The other impact is HMRC do charge interest. If you've reduced payments on account lower than what turns out you should have done, they will charge 3% interest. But some people, hopefully most people, if they reduce the payments on account, is because they genuinely believe their income will be lower, or the tax bill will be lower at least next year. I should say one thing: if you're paid under pay as you earn, perhaps as an employer or director, you can ask to have any taxes due paid via your tax code, as long as the tax due is less than £3,000 and you haven't got much self-employed income. And of course, if the tax bill's collected via tax code, there won't be payments on account either. So it's not uncommon for employees with a bit of investment income maybe, or that has tax on, to make that election. As long as they get their tax return in by the 30th of December, they can use their tax code to pay their tax bill, and it smooths out their cash flow.